Well, there is a risk that is inherited within this with the startup, not just the fintech, but any startup, is that as a small organization you can get away with a lot, right? And I compare it to the temptation of running the light in the middle of nowhere versus running the light in the middle of downtown Manhattan. Right? It's who's looking at you really influences your behavior. So when you're a smaller company, you're under the radar for everything. You can take a lot more risks, but those risks are fueling your growth. The more you grow, the more prominent you become, the less risk you can take, because people are watching you. Especially in a fintech environment where when you grow, you rely more and more on the traditional financial services. You have to have a bank account. And once you start putting good volume on that bank account, that bank is going to look at you and see what you're doing. You need to sell your services through licensed entities or through licensed agents. Then now you start tapping into the big ones to grow your market. They start looking at you more closer, right? And so does the regulators. Once you start getting into the newspapers and you're gonna recognize some brand, that's what they look at you. And some adapt, and some it's so embedded because they created the products and they created the way of doing business in a way that with no compliance, and there's no way to then retrofit. They're back to the problem of the big boys, right? Of the big banks and the big financial services that as regulations come in, they just bolted them on. And when you're a small, agile company that is trying to grow, you can't do that. You have to embed it from the beginning.